Could you describe the regulatory environment of the alternatives?
Yeah, Andrew, very interesting question, and no doubt a very topical one, and has been for certainly the last couple of years in the hedge fund industry, leading up to this regulatory environment that we find ourselves in. I think it must be said that the hedge fund industry has come from what I call a bit of a self-regulated environment pre the regulation coming in. I think it's always been a fairly robust industry. I think it's been an industry that's been led by top quality portfolio managers with robust risk management guidelines in place, mandates in place between you and the investor, a lot of transparency in that regard as well. But I think what the regulation has done is it's probably only added to that. I think the fact that there has been the introduction of a ManCo, which adds oversight to what the underlying managers are doing, provides some more compliance reporting and transparency to your investors, and of course the fact that you've got the Financial Services Board presiding over the industry now, I think should provide investors a lot more comfort than we found ourselves in a couple of years ago. Previously hedge fund managers were using Category 2 and 2A licenses under phase to run product. While the products themselves were not regulated, the managers were in fact very regulated. So I think that's probably where the natural self-regulation came from in the beginning. But yeah, I think we can look forward to some good things in the hedge fund industry going forward. I think we can look forward to some positive flows. Clearly, there are some structural inefficiencies from an access point of view that need to improve and get better, and I think that will happen over time. But I think we're in a good place.